Hello guys, welcome to a Trading Parrot. Tricky weekend, having another rally on a weekend. And of course, we have to do the due diligence. 4 hour at the moment, overextending right above the global resistance. This is the ceiling for the 4 hour time frame. So what's next? Well, we have to look for a pullback. And the point is not whether we get a pullback or not. What we need to be looking is for clues of whether that pullback is gonna be a healthy retest for the daily breakout that we are currently experiencing. This video is gonna be a short video where we're gonna focus just on the CME gap, on the lack of liquidity towards the upper end in the short term. Fair value gaps about to round out as well, so very critical information. I decided to make the video short and leave outside the weekly close, the monthly close, the important news, which are gonna come in a separate video after, just because I don't want to miss this time sensitive information. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Over the weekend, I published 2 videos about altcoins, and although it had quite a cold response from people didn't feel that interested into looking into Aave and Tron. I have to say that the setups play out really great. By today, I'm taking profits on the scalp on Aave. I'm rallying still on my swing trade. The targets are falling like roasted ducks on a summer, and still videos are getting barely a couple of hundreds of likes. Anyways, I'll continue with the approach. I suspect it's got a lot to do with this decrease in Bitcoin interest now at 19, which is a lower low relative to the 22 we had by the end of February. Let's get into the content. Just for the sake of context, at the moment, the biggest fundamental narrative towards Bitcoin rallying is what we've been chasing since November, which is increase in the balance sheet from the Federal Reserve, which we have a big green checkbox in here with higher highs, higher lows, bottom information. We have an M2 as well that is putting new all-time highs, global liquidity, but still on crypto we see that cash is flowing out of crypto. This band in here of 2.53 is almost the lowest in these areas. But notice one thing, the last 2 times that we have these depressions, we have pretty decent rallies right after that, particularly this one in October. So let's keep an eye with that divergence between global liquidity going into the macroeconomy, into people's pockets, going in that direction, while at the same time crypto seems to stay boring from social perspective and from injections into crypto. In the next video, I'm gonna talk about this potential buy signal that we are about to print on the hash ribbons. The full detail is gonna go there. In that video, I'll cover all of these things like the reclaim of the all-time history support band, and all of that is gonna be really important for investors. This particular video is more important for scalpers, for swing traders. And the last video I put was on Saturday, a 1 hour video that also including the short term in here. And we can see that we form a bottom formation around Friday, and since then we found our pivot. The pivot was around 60. My speculation was that it was gonna be around 59, but right after that on Sunday at 5 p.m. Bitcoin decided to do what has really less than 20% probabilities, which is after having peaked just like we peaked in 17th of January, and then we reset back to 19. Then we peaked on the 2nd of March at 73, and then we did a reset to 27. Then we have this peak 19th of March, but this peak is doing something rare, which is after saying, okay, I'm ready to do a channel to the downside like this and this, instead is putting a new high, and that is showing that there is a shift in the momentum on the 4 hour at the moment. But my question is this to do with the fundamentals of the liquidity coming into the market? Is that liquidity already here? Is there a lot of people buying Bitcoin, or is it just a short-term rally using futures with increases of open interest? What's going on really? Are we there yet, or are we gonna have a little bit more of downside downside. And I guess for the short term, for the scalper and for the swing trader being in some positions, I'm interested to see what's going to happen in here. So let's start with the basics. The candle at 5 a.m. already broke above that ceiling. So we are in an extremely rare situation, very overextended. We have taken out the 69 and now we are pointing at 72.5 on the 4 hour. I think around here, finally, we are going to get that top of the 4 hour that is actually equivalent to the previous one. So maybe this one wasn't the one that didn't touch. We were 2 points below it. Now we are 2 points above it. And our support is somewhere in here. So if this now did what it's supposed to be doing, we will see RSI coming like this down or faster. One of those two options. It will be really rare at the moment that we carry on into the 80s or 90s. There is a chance that we do that following the general markets if we have a rally on general markets. On pre-market, we can see that Nasdaq is moving slightly higher. S&P is 6 points higher than the close of Friday. So I guess this is what is actually helping with the VIX that we covered on Saturday, also putting a new low back inside the range. So cooling down that expansion that we are forecasting eventually is going to happen. Now, looking at the price on the 4 hour, we can see that we have taken the highs of 87,481 just by a few dollars. And what people are fearing at the moment is, are we going to put a double top in here on the 4 hour? And I think that is on the table. It's not guaranteed, but we can assess. And that's the reason why we are here at the moment. Are we just going to take a little bit higher and then have a huge drop to the downside? What is the downside? All of that, I want to answer it. And I'm going to use multiple sources of data to give you that answer. So appreciate that there will be some ambiguity, some contradiction between the different signals. So below the price, the move has been quite intense. It's leaving tons of fair value gaps for a potential retest that increases the chances of a pullback to either do the retest, or if we go slightly higher in here and then we collapse, then we call that a liquidity hunt. And that could be the perfect setup for the short as well, because you hear what you have, guys, is a bear flag. So it is bullish what we are doing from multiple perspectives, but from the context of the pattern that we see in front of us, this is a bear flag, right? We come from the top and we are trying to put higher highs and higher lows in a channel pointing up. And if this guy sticks the nose slightly higher and then corrects back down, then you get the full completed bear flag setup. So I'm going to remove the symmetrical triangle. It's no longer of use. And I'm going to just place this in this way, because with that angle, we get that point of contact at 87,850. I think that is definitely an area of interest for a potential, just notice that, potential rejection, not a 100% guaranteed. If there was a rejection somewhere in there, then we have fair value gaps at 86.6, 86.3, 85.5, 84.4. Notice that around 84.7, that was the big resistance that we kept up until around 18th of March. On the RSI, what I'm going to do is I'm going to ignore now this red line and I'm going to move it to here, because we are looking for a channel to the downside. We have to put a channel to the downside. That is like 99.9% chances at the moment. That doesn't mean that this is the highest price we're going to get, but it gives us some sort of template in here to understand the magnitude of each of the waves once we enter that channel. Remember that there is still a likelihood, if general markets had a crazy rally on market open, instead of selling off the pre-market push, we could have a retest technically in here and go to the 80s. That is not impossible. We just need to challenge both sides. That's why I mentioned this as well. On the daily, the context is extremely interesting. We have the falling wedge and we are currently breaking out from the falling wedge if we close the daily like this. That's the way most investors are gonna see this. Notice that we have been at 99.6. That was around 1.5k above the falling wedge, and still then we put a 20% down. So watch out for the daily closing price. Do not just enter on a long outside the falling wedge, because from here, of course, the reward is huge if it succeeds, right? So you can take the long and you can target, I don't know, over the all-time high if it succeeds. But if it fails, from there, they can drag you back into the next low, 13K lower, 15%. So if you're in a 5X, that is a huge drawdown. We are above the 200 daily moving average, and one of the things that was making me actually bullish on Saturday was how much we were defending this area without selling off. Notice that when we got into resistance the previous times, the rejection was pretty much immediate. We had a green candle below it, and then that red that you can see in there at some point during that day was a green, and it was 1.5K above the resistance. But then it got dragged back down by the end of the day, and then it didn't give any option to exit, just lower, 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 until it gets to 78K, which is really painful considering that you're coming from 100K all the way down. In here it was the same, rejection, rejection, and each rejection pushed the price down at least over 10K. So here we approached this level very humbly, but then the rejection was 4.6K. So relative to the previous rejections, this has been 1/3. And I guess that is what's keeping the strength at the moment to do another try for a breakout. On the daily, after we had the breakout in here at 50, we came back down and we also pretty much defended perfectly this move up. There are no big swings. That's because over the weekend there was low volume, of course, but we remain right there below that resistance, and at the close of Sunday, we managed to close once again at around 50. So this was 50, this is 50, 49 point something, almost 50. And the day now is at 51.61, right there at the median. Our speculation that we're gonna get this channel to the upside somewhere in here so far is pointing that we are in the right side of the momentum, which is at the moment up. Can we get a fake out today from here? Sure, we can still get it, but at the moment the channel is saying that as long as we now defend 43, we can still continue in this upside somewhere in here. If we go below 43, can we go lower? Yes, but at a cost of a higher risk. Of course, we can go up to 33 and we still have higher lows. But, you know, it's not ideal. It's a lot stronger as an argument to defend the 43 at the moment. So what is that price 43 that we need to defend? Let's look at the chart. So today we need to defend 82K. You're gonna say, yeah, but that is 5K lower. Sure, but 5K lower, defending it is a lot better than being at 100K and then a couple of days after being 21K lower, right? So it's a great compromise. If we go to 82, we can still say that we are there battling a potential exit from the top of the falling wedge. Something I forgot to say, and now we're going into the weekly time frame. You can see we are approaching the bull market support band with 3 green candles. This could turn into a similar effect that what we have with these 3 green candles. Of course, we want the larger ones. Those become the 3 white soldiers, I think they're called, and they take that name as long as you get 3 long bodies in green. But still, 3 green candles is always nice. Not like this one with a third that actually sucks, but I think this is good enough to at least enter the bull market support band or potentially start challenging that 93.8, which was the support of the weekly. On the CPR, we are currently entering the pivots and starting to challenge that resistance. It's gonna be a strong resistance, and if we manage to overcome 90.5, which is the top pivot, we could be going to 98.7. Remember that the model says, this is not my opinion, this is what the model says. Last month we touched the second and the first support, therefore this month we should be touching 74. We'll see if this month the model is going to be wrong or maybe right. CME, that is the first potential target for a pullback that we should be looking into. Not to blindly think that we are going in the next hours there, put a short 50x. No, that's not the point. The point is we are going to now accumulate evidence of a potential pullback, and we're going to start measuring which one is more likely based on the evidence and past performance. And at the moment, the price is putting smaller and smaller candles on the 4 hour as it goes up and it hits the resistance resistance, right? We have that potential for double top. So you can see on CME, the prices are matching almost by the dollar. On Binance, it's slightly higher. One is 521 and the other one is 463. So around $50 difference between the two tops. And we can see that the CME premium, the gap is located between 84,425, 85,145. Whereas on Binance, we can speculate because the candles are very different, but let's speculate that that corresponds to 84,931 versus 84,440. That is a gap of around $479. Let's see on CME, 740. So it's slightly larger on CME. So let's expand this in our speculation. Maybe it's up until 84,200. Remember that Binance needs to be cheaper than the premium on CME. So this was 4,225. So let's assume it's $200. Now we get a gap of around $700 that we need to be looking into. That's a downside to fully close it of 3.6%. Not too difficult, I will say. Another thing that you need to know for the short term for your scalp and swing trade is that once again, leverage squeeze is saying that there's just too many longs in this whole move up. It's just flagging and flagging. Last time we had this was on Wednesday and it played out well. It won't always play out well, but you know, put this together with the CME gap, with less liquidity to the upside, and then rest of the things we're gonna see in the video, and you start building a case for a pullback. Next, we have the open interest percentage change, which is the orange in here, versus the percentage change in the price. It's almost 3 times more. So that's how intense has been this move in terms of open interest. 3 times what the price has moved. So you can speculate that that delta could be because most of the buyers at the moment are taking leverage positions, whereas on spot, either there is no move or possibly they are selling their spot. And that causes that the price change is not as significant, but people are entering. That is speculation number 1. Speculation number 2 is that this increase in open interest with the price not going that much up could be because shorts are responsible for that increase in the open interest. Neither of those scenarios are really great for a short-term move, and it can very easily, as you can see in past performance since late February, lead into a local top. Notice as well that if we enter in the context of a short squeeze, for that price needs to go, in my opinion, at the very least to 95, 97K to ignite the short liquidations that are there. In a short squeeze, you can rally in these conditions, and that is because the shorts are the ones being liquidated in a cascade of effect, and then further shorts enter in positions, get liquidated, and the thing doesn't stop until they are all completely wiped out. I'm not sure that's gonna be the case today. Liquidations. We left this area of 82,900 that I was so keen on using for an entry. Unfortunately, we went for the very thin liquidity to the upside. I think there's tons of speculators at the moment and they're playing with leverage. You can tell that the price has gone straight for this area of 87. What is left? There is left in here 87,500, slightly above the previous top. That is corresponding with the top of this pattern, right? 87,800, and here we have 87,800 somewhere around where I have the cursor now. Can we go further? Yes, we have additional liquidity in here. There is this blue, but it's less than the accumulation that we still have at around 83K. So from the point of view of liquidation levels, it's indicating that it's kind of starving from liquidity as a motivation to continue higher. Can we get motivation from something else? Sure, but from liquidity short term, running out very quickly in here. Best case scenario to get into 89,400. After that, there is a depression in here. So you need then to go over 90s and start a short squeeze and back into bull market mode if we do that. Long-term liquidity has some liquidity at 92. You see this blue thing there is actually extremely small, but that is it. On long term, there is no liquidity in the close proximity. There is just this white line of resistance. We are in the bear flag and a fall from there. If we repeat previous performance, and I'm talking about this performance, or I'm talking about the 21 down that we have in here end of February, then this one, if we repeat that past performance, then we have enough momentum, or we have gone high enough to build enough momentum to hit the next lower low at around 76k. That is not guaranteed at the moment. There is a battle to decide one or two, and that's why we need to be looking at this data. That 82.9 is also in confluence in here on CoinGlass. The small liquidity that I'm talking about in the 2 weeks runs out at around 88,600. Price doesn't need to take it all. Remember that. Pro tip as well. Don't assume liquidity must be had in full. And in the 1 month, we kind of have the ugly truth, which I call this particular chart, that shows that either we need to decide to go over 100k to take that liquidity, or 67k, where we also have large pools. On the last 30 days, and let's refresh this, let's see if that's already gone, we have a big liquidation at 87.8, and I think it's just too close to the price to leave it there, guys, and that is the top of this triangle. So whether the price is gonna break out from here, from this bearish formation at the moment on the 4 hour, on the daily we have a bullish one. So keep your context, because 4 hour can see a rejection in here and put a low somewhere here. That is a decent pullback. If it bounces from 84.7, I will love that. If not, if we go to the 46 RSI that I mentioned before at the 84.2, or the VWAP that is 83, after that we start running out of possibilities for the 4 hour to defend the breakout, of course. So this is what I mean by running out of liquidity. We take the 87.8 and then we have a huge depression into 90. So if liquidity is the current motivation, that's where it ends, and we need another motivation, which could be a pump from general markets. After we take all of this, these levels that you see in here are gonna start taking protagonism in the discussion, because they are as high as this high, and that one is gonna become the biggest in the 30 days. That is at 83, so look up for that. Also notice that we have liquidated tons of shorts already. That is an alpha for potentially then liquidating longs. We have now 340k of longs delta liquidations, putting the longs at a higher risk. We have some ask liquidity at this level, but it's very small. It's still not over 0.2, which I will say, guys, let's short this like crazy. I think the short is around the corner with low volume, but I will want to monitor as well how is this. And I'm talking about a short for the pullback. I'm not talking about a short with all my capital with leverage, that then if Bitcoin goes to 100k because general markets decide to crazily bump, then I don't have any way to manage that short. There has to be risk management, and I have to take it at a moment where I see I'm in the right side with the rest of the data. So 0.03 is very small, but maybe once we get to 87,800 or slightly higher and we pinch to potentially produce a liquidity hand, I come back to this chart, I see well in the negative, and that could be really great. Let's look at longs versus shorts. And at this point where we made a move from 68 back down to 50, we said that this ratio was calling for shorting. That was at 87,500, that was that top, and we had a move down of around 5%, not a big deal, but that called the local top, and that is precisely what we wanted to do. Now we are at 48.4, so a new low there, while the price is moving up and rolling over on the 4 hour. So watch out for that potential short around there. I just don't want to be saying that there is a short setup, because if the short fails, all the people that have no clue how to ride a short, how to do risk management, are gonna say, you call for a short there. Sure, a short can run, you can be wrong, you can take a small loss, but I'm also running longs, and from my longs I take profits. So it all compensates. It's all about opportunities. On the order book as well, we can see that at 103k now they have the spoofing order, which is crazy. We saw that on Saturday and it's still there. On Trading Light we have it at 95k. Let's see what's going on with the delta longs and shorts, and wow, wow, it broke above the channel. It pinched the channel. So longs versus shorts is currently in this channel and it's calling for a short, right? So it broke out and it's coming back down. So there is a decent chance that around this area is an area of potential value for a short. What else do we have towards a potential short in here on a pullback? Well, we have this vacuum in here, which means that either the short is around the corner for the reversal of the pullback and you can target fair value gaps up to 86 or up to 84, or if you want to go very, very aggressive with the target, 82.5, in which case there should be also a reversal lower. But if you go to 84, that still keeps the trend fine and you can just short a move like this, assuming it's successful. Price can still take the fair value gap, but then it also runs out of motivation to go higher. It won't be able to go to 95k if general markets don't have a rally as well. If general markets open, have a huge rally, then fair value gaps don't matter, liquidity won't matter. Market is just gonna go for the stop losses of the shorts that are way higher, and that is doable, but without the stimulus, it's just unrealistic that we cross too much higher from here. 89, 90, yes, maybe, low likely. 87, 800, definitely, very high likely. 95 without general markets rally, like less than 1%. So I will play this probably with some sort of stop loss in here. I wouldn't DCA at 95 with another short with larger volume, because if you get to 95, you change the trend in the structure of the weekly, and then you could be in a situation where you enter your short here at 61 and you are DCAing at 71, and then you have to eat all this stupid drawdown of 52 on a leverage short. Watch out what you're doing. So if you're wrong in here, you take the stop loss and you take a percentage, a small tiny percentage of your account. That's fine. Most of the times that short will play out. So this will be 1 out of 5 times that you're wrong, with 4 times compensating, and you still build your account. All right, guys, I'm gonna do the longer video with the full information, with all the articles I have gathered for you following this one, but it's gonna be probably in the afternoon coming out. Thanks so much for watching. Remember that I still have the trading competition. There's 2 days left to participate. You can use the short or some other setup that you may want to do and be part of the 5,000 pool. That's our prize pool. It's on Bluffing. It's non-KYC exchange. I also have BitUnix, non-KYC, link is in the description, and OKX with 60,000 in rewards. Whichever you pick, you are supporting the channel. I'll see you later. Bye bye.